What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Coinbase Global with the ticker symbol COIN. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. This video is for entertainment purposes only. Please trade at your own risk. So we're going to do a technical analysis update for Coinbase. Last time I looked at it was which I believe to be on December 25th, Christmas Day. So it has been almost about a week now. Looks like last week Wednesday was Christmas. Take a look at the calendar. It was last week Wednesday. And you can see that since last week Wednesday, which was right over here, price has broken down of that 265 level and it has continued down lower. So what's going on? You see that if we just back up on the chart, let's just zoom in a little bit more. You see that we had a volatility compression from about early to mid-November up until about mid-December, and then price broke down lower. Price was making higher lows, but it wasn't going up higher. It was making kind of equal highs. You can see that it was finding resistance here. It tried to break out. This was a failed breakout, stopped all the shorts who had the stop losses up here, tricked the longs into entering, and then immediately reversed, and then looks like it's stopping out the long. So this is a volatility compression. It was bound to break out, and in this case, it did break out lower. So now price is in a downward trend, and that's this orange channel represents that downward trend. Price is also below that EMA. So it's a sharp move through the EMA, which definitely shows a sharp change in momentum. So now we can zoom back out a little bit more, zoom out, and there was this previous range pattern in play. This yellow range represents the high of 265 as resistance and the support of about 200 as support. You see those multiple touches here for resistance, multiple touches here for support. And then price broke out on the bottom, failed to go lower. Price broke out on the top, failed to go higher. Now it looks like price is back inside this yellow range. So it does make sense because ranges typically act as kind of magnets, like a black hole. It just sucks price back to it. It's hard to escape the range. So price is trending down back inside the range. And since we went up really quickly right over here in the past, we can go down just as quick. That's why you're seeing the momentum pick up instead of slowing down, because there's not a lot of support stopping this drop from continuing. We have a gap fill right here represented by this red circle starting at the 221 up until about the 194. So it does make sense why we are continuing to drop lower. That is a good target for the bears to reach. And also the lower side of the range at the $200 level as well can act as support. So it does make sense. We have some confluence of these two targets right around the same level. That can possibly reverse this downward trend, because as right now the bears are in control of the market in the short term. Long term it's still the bulls, but short term it is the bears, and you see that they are still trying to drop down the price. Price can reverse anytime. I could always be doing this wrong. I could be missing something in my analysis. So that's why you have to have risk management. You can't be, oh, I'm 100% sure it's going to drop down to the $200 level, because you could be reading it wrong. You don't know what's going to happen in the future. So that's why you have proper risk management. You don't bet everything on your analysis because it can be wrong. So again, I'm not guaranteeing we go to the $200 level. That's what I see on the chart, and I think that's a high probability of occurring, but we don't know for sure. But as right now, price does look to be still bearish until we get back above the 264 level. Until we see strong bullish momentum back above the 264 level, and I think this thing still looks like it wants to drop down lower. So I'm looking for the gap fill and the lower side of the range, which is right around the $200 level, possibly even the 190s. So that's what Coinbase is telling me. Now let's zoom out even further, and we can possibly switch over to the weekly chart. Let's go over some key things on the chart. You see that price found resistance at the 340 level because it was prior resistance right over here. Back here in November of 2021, resistance here can equal resistance in the future. Who knew that was going to be resistance? No one knows for sure, but you can mark it, and you see that price slowly went up to it and could not pass it. So it's acting as a resistance once again at the 340 level. Led to this huge sell-off. You can see that price for the past 4 weeks have been down. And so far, that's already about a 28% drop. We could be seeing upwards of a 40% drop very shortly. Has that happened before? Well, let's go ahead and measure this drop right here from the 283 to about the 146. That was a 48% drop. So we have seen almost a 50% drop, and the trend has still resumed higher. So again, these crypto stocks that's normal. I mean, it has happened several times before. Maybe even this drop right here, that's a 39% drop. Let's take a look at this drop right here. That's a 40% drop. So 40%, 39, 48. Now this one is about a, what did I say again? Only a 29. So this is the lowest drop we have seen in this entire bull trend. So I'm looking for about a 42% to about the average of the other drops. And it makes sense because that's where the targets are currently at, the lower side of the range, the gap fill. And also now we can move on to the trend lines. You can see that first price is moving on this slight angle of attack. And then it went then the bulls went into a steeper angle of attack. So that generally will occur in the market. It's not going to move at a very slow pace. Eventually it's going to pick up. So now it's in this second angle right here. So that's support. And we could be maybe forming a third angle. This measurement target is acting as some sort of, you can move and you just draw your own trend line. So we could be moving at maybe a third angle. So we'll see if price can bounce over here at the lower 200 level. So again, that could definitely be coming into play. So as right now, short-term bearish, long-term still looks okay. You see that we have one large massive leg up right over here by the first arrow. Then we see a correction, a complex pullback known as a two-legged pullback in play right here. Then we saw the start of the second leg up. This is a measure move objective of about $400. This was the first attempt by the bulls, one large push up that failed. Price is selling off. Generally, you're going to see a couple more attempts, so there's a good chance we'll see a bounce over here for another attempt up, something like that. And then the second attempt up could be maybe a combination of two small legs, something like that, or one large leg, just like the prior leg right over here. So it could be one large leg like this, or it could be a combination of multiple legs like this. But either way, I still think there's a good chance of seeing another attempt up higher towards that 400 level. We'll see how high it goes. We don't know for sure. And especially with these trend lines still in play, there's a good chance we see another leg up higher. And that's targeting the prior all-time high area of about 400 to about maybe 422. So it does make sense why the bulls are targeting that area. So that's all I have for Coinbase on the daily weekly charts. This is looking at it on the regular scale. Sometimes look at it on the log scale, but I believe regular scale is probably the most commonly used. So it's good to always look at that one first and then also look at the log scale, see if you can find anything different. But as right now, log scale is also looking bearish, but it does show price is still in a massive uptrend. So let's go to the log scale and I'll show you guys that right now. This is the log scale, but you can be fooled by the log scale because it does look like a nice strong uptrend. But again, you have to look at the technicals, and sometimes it doesn't look as clean as it should. So as right now, it looks like a nice clean uptrend, but on the regular scale, it looks like we could be seeing a decent sized drop. But this one looks more bullish than the other one. So again, it kind of changes your perspective. So it's good to use the regular scale because that's the more commonly used one, and it keeps you rational and not have a very strong bias towards the upside, because this one can show that the trend can flip back down to the downside for the long term. So we'll see what happens to Coinbase. But as right now, short-term bearish, long-term bullish, and we'll see what happens. It's Vee Trades, and thank you for your time.